Hi, welcome to Friday Live at Noon, Money Mastery with Dee. Glad to have you here with us. And today we have a super special guest. We have Ed Atkinson, Golden Lenders. Ed is somebody I have known for so many years. He is a mortgage lender really without compare. Welcome, Ed. How are you doing today?
I'm doing great. Thanks for having me.
I'm so glad you could come today. I've been looking forward to having you here as a guest. I have seen you do amazing things for clients of mine over the years, just a magic touch. So you're a different kind of mortgage lender. You're a broker. Can you help people understand what that means?
Sure. Yes, I am a broker, and thanks for saying that. I do my best all the time. So the difference between a broker, there's basically four different places that people can go to get mortgage loans. They can go to their bank or credit union. They could go to what's called a correspondent lender, which is similar to a bank or a credit union. They could go online, someone like Quicken or Rocket Mortgage, or they can go to a broker. The difference with a broker is that we are basically independent contractors, right? So two things there. One, unlike a bank or a correspondent lender, we are going to have a number of different lenders that we can work with. If you go to a bank or credit union, they have their products and their products only. So we have a number of different lenders that we can look to. The other thing that's important about brokers is, in general, we have a little bit higher experience level than you're going to see in some of those other places. In many cases, brokers have worked at correspondent lenders or banks or credit unions and then became an independent broker at some point. And so you're going to see people in the broker channel that have 12, 15, 20 years of experience, and you won't necessarily see that with banks or credit unions. And then the final thing is that we have basically no overhead. So most mortgage originators, mortgage brokers work from their home. We don't have brick and mortar structures that we have to pay for. We don't have additional employees. We just don't have the overhead and expenses that all of those other channels that I mentioned have. Sure. And so we're normally able to be a lot more competitive because we're really lean and mean with regard to how we do our business.
I wouldn't use those words, but that's what I've seen. The lending you've put together for our clients has been really impressive. When you know what's going on, the closing costs can make a big difference. The relative interest rates, you guys really, really shop it around.
Yep.
So that's nice. So what's new and exciting in the world of mortgages these days, other than I'm for those of you who don't know, getting a mortgage broker to be able to sit and talk for 30 minutes is unheard of right now because it's so busy.
Yeah, we are very busy. We've been busy for about the last 19, 20 months or so. That's when interest rates really started dropping initially. We are still extremely busy, especially if you're working with a broker in Colorado. We are sort of in a little bit of a bubble in Colorado. We have a super, super strong real estate market. Anybody that's got a house, buying a house, selling a house, they all know that. But that keeps us really, really busy. Recently, we've seen the interest rates start to go back up. So there are some changes happening in the markets. We're looking closely at what's going on with inflation. And there are some things with regard to our economy that are affecting 30-year fixed mortgage rates. And they've basically been going up for about the last 3 weeks now, 20, 21 days or so.
Okay. So how much when you say going up?
Yeah, so when I say going up, so 2 months ago, interest rates on a 30-year fixed might have been at 2.75%, maybe even a little bit lower than that. Today, they're in the low threes, so 3 1/8, 3 1/4,
okay,
maybe 3%. So we're talking about somewhere between 1/4 and 1/2 point increase in interest rates. And we don't see that changing a whole lot anytime soon. It's sort of, we're on this trajectory. There aren't a lot of economic indicators that show that it's going to go the other direction anytime soon. So,
you don't see it going down or more up. You kind of we're here now, or
I think that there's more of a high side risk. So there's more indication that the rates will continue to kind of inch up. We don't know how far they will go, but I think 3.5. I think 3.5% is absolutely within the realm of possibility here in the next couple of weeks.
Which is, if you've been on the planet very long at all, is still an amazing interest rate.
It is historically. I mean, if you look at interest rates over the last 30 or 40 years, we're still really, really close to the bottom.
Yep.
I talk to people all the time that say, "Oh yeah, my first mortgage was at 13% or 15% or 8%
11
or whatever it may be." So yeah, they're still historically very, very good.
Yeah. Yeah. So I know in the olden days when the interest rates were much higher, when you'd start to see the interest rates tick up, all of a sudden there would be a deluge of people trying to capture it. But I'm hoping that we're so low. I mean, it's at the end of the day, the relative cost of 0.25% on a 3% loan isn't a deal breaker one way or the other. Is that, what do you see?
Yeah, I think that's absolutely an accurate statement. Most of the people that are looking to refinance have already refinanced at lower rates. Some of them haven't. Some of them have other needs where a quarter point is not going to make a big difference in the grand scheme of things. Where it starts to hurt a little bit is with people purchasing. So especially in the Denver market or in Colorado, our real estate values have gone up so much that it's just difficult to find a house at a decent price. I mean, they're just going up every single month. We're probably at 5 to 7, maybe 8% appreciation, maybe higher in some areas. So a quarter or a half a point can make a little, can make more of an impact on somebody that's purchasing a house than somebody that's refinancing, for sure.
Absolutely. I see that. We've got young folks that we work with, some that have recently purchased, and a year later, their house has gone up in value 10%. They're ecstatic.
Yeah.
But sort of pie-eyed going, how did that happen? And then the other ones that are trying to look, and if you're out there wondering what the kids are complaining about, it's really hard to be able to afford a home right now in the Denver area. Now, there's other parts of the country where perhaps it's a little more attainable, but boy, here in Denver, it's a tough market.
And it's really important to have a really good mortgage professional and a really good real estate agent and have a team around you. If you're trying to do this on your own, it's just that much more difficult. And, we have.
You don't just go on Zillow and say, that's the one I want and be done. Yeah.
Yeah, I would highly recommend against doing that. It's just so difficult to get under contract. I mean, we probably have 10 to 15 buyers for every house that's for sale, unless you're looking at $1.5 million home or $1.5 million or higher. The price points in kind of the 350 to 600 price point range.
Yeah,
that's going to be the case. If you're out looking, you're going to be competing with a number of other buyers. So you've got to have a really good team in place. You've got to have your financing lined up, and you've got to be decisive and be able to act quickly.
But the other thing is, don't buy things as is. Don't buy it sight unseen. There's too many stories of folks getting into houses where they weren't discriminating enough. Don't buy it because it's your only choice. It isn't. There'll be more. I guess what I'm leading to is get a home inspection. Get a home inspection.
Walk through the house, have a real estate professional help you.
Yep.
They see things that you won't see as a buyer.
Exactly.
All of those things are great ideas.
Yep. So what's it look like for folks trying to move up in houses? As a mortgage broker, how do you counsel folks? I've got my starter home. We've got twins on the way, and it's a 2-bedroom house. This is not going to work. How are people managing that?
It's a great time to sell, of course. The difficulty, if you have a house that's in good condition and good location and it's priced right, it's going to sell quickly. It'll probably go under contract in a couple of days or less. So that part's not going to be difficult. The difficulty is the timing. So finding the next property and being able to make that timing work. So what we do for a lot of folks, if we can, is we try to get them pre-approved to purchase the new home without having to sell the current house first. Now, not everyone can do that, but certainly if there's a way that we can help our clients do that, it just makes that a whole lot less stressful and way easier to make the timing when you can plan on closing and purchasing this new house, moving in, and then worrying about selling your other home. So there are a number of different ways that we can help people with that. If they have questions, they need to reach out to a good mortgage professional, and we'll figure out ways to do that. If they have to sell prior, then there are a lot of things that we can do and their real estate agent can do to help them make that transition a little bit easier. And it's kind of like financial planning. There's just 4 or 5 or maybe a half dozen things that we're going to tell them to do and get in place so that they're able to make that transition smoothly, or as smoothly as possible.
Yeah, so I've seen some things where the owners will rent back for a certain period of time. The house will be sold, or Is there a way to delay first payments on mortgages for a new mortgage to avoid double mortgage payments?
We can't do that exactly, but if you're closing at the beginning of the month, you're going to have almost 60 days without a mortgage payment. So that's one of the things that we can help people without where they're not making double payments for more than a month if they can help it. The other thing is sometimes sometimes the buyer, the person that's buying your home may be willing to extend the closing. So you can get under contract to sell your house, but maybe you don't close for 60 or 75 days sometimes. This is similar to a leaseback situation where you just got a little bit more time to find that new house and close on that property. So there are a number of tools that we can utilize to help people with that transition. But that is the most difficult thing for somebody that's moving up.
Yeah.
The timing of the whole thing.
When I'm talking with folks about moving up, it isn't about the logistics. It's about, does it make sense? How do you afford it? Quality of life issues, age in place, and all of that. The logistics are way out of my league, and it's a lot of moving parts.
It is. There's a lot going on. It can be very stressful. Once you sign the contract, it's a legal document. You've got to be aware of all that.
Lots of adulting in that one, isn't there?
It is. It's a little bit daunting, for sure.
Oh, well, did you have to do that when you moved recently?
We did, although we were lucky in the sense that the house that we were purchasing, we got an extended close on that. So instead of having an extended close on the house we were selling, we sold that quick. And then we leased back. So we closed in 30 days. We were able to stay for another 45 days in our home that we sold. And then the house that we were purchasing, they gave us a little bit more time to close on that. So that's what we do with a lot of our clients. And that's exactly what my wife and I did when we moved this last time. So
firsthand experience.
Yeah, and there's nothing that I can do as a mortgage broker to make that process any easier. There's no corners that I can cut. There's nothing that I can do with my lenders. It's that legal transaction that has to happen. The only advantage that I had was I knew how the system works. And that's why if somebody else is doing that, they've got to have a really good mortgage person and a really good agent to help guide them through that process. So.
Well, the secret sauce is where the system has switches or the ability to flex. Us normal folk, not a clue. No idea how to do this. That's so long term. Where do you see the mortgage market at? Are there new products out there, new ways of? I mean, back before all we kept things that were obviously.
Oh, you're starting to break up a little bit. I think I heard what you were asking. So one of the big things that's coming back to our marketplace is jumbo loans. So in most of Colorado, certainly in the Denver metro market, if your new loan amount is over $596,000, you're going to have a jumbo loan, which is a non-conforming, non-insured mortgage. They're more difficult to qualify for. They usually have higher interest rates. When we had the COVID issues, the lockdown that happened this time last year, a lot of lenders stopped doing those jumbo loans because they're just a little bit more risky. And so I would say about 75% of the jumbo loan products in the marketplace went away. They are finally now, after 12 months, starting to bring those products back. So we now have, for those borrowers that are purchasing more expensive homes or have higher mortgage amounts, either for a refinance or for a purchase, we now have the ability to do these jumbo. We've still had the ability to do jumbo loans. We just have a larger selection of lenders to choose from. We have more ways to get people approved, and the rates will become more competitive as we get more lenders opening back those products. So that is the biggest change in the mortgage industry, other than the rates going up a little bit, that we've seen here in the last 30 days or so.
Okay. Now, do you deal with reverse mortgages at all?
I don't. Reverse mortgages are sort of a different animal.
They are very much.
They are. They're very complicated. There's a lot to them. It's a different process for getting those loans closed, a different clientele. And so most of the reverse mortgage brokers that are out there, they usually do that almost exclusively. They don't do anything but reverse mortgages. So
that was my next question. Are you going to add that to your toolbox?
Yeah, so I probably could do reverse mortgages, but I don't think it would be doing justice to my clients. It's better for me to refer them to somebody who does those loans only
Okay.
and knows exactly how they work. And I have some really good referral partners for them.
Okay.
Yeah.
Good. Yeah. So life cycle, buying that new home, you're really helpful. Mid-cycle, as people are moving up and need those jumbo loans, that's great. And hitting retirement years, if you still have a mortgage, I mean, maybe you've planned well and you don't, but if you still do, reverse mortgages are a good fit. And we would find you someone else who is a specialist in that area. Okay.
Or some people decide to downsize. So that's another
Right.
area that we can help a lot of people with is, they're empty nesters now. They don't need the big house and they're wanting to either move to a different location or just to a smaller home with less maintenance, less cost, et cetera. And that's something that we do a fair amount with as well. And actually, the interaction with financial planners, I see that a lot more with the first-time home buyers and with the downsizing folks who are getting ready for retirement.
Yeah.
Those are the people that that I seem to refer to real estate or to financial planners a little bit more.
Yep.
Just because they're asking me questions that I would refer to a financial planner or to a CPA.
Right.
Their budget questions, their investing questions, their
taxability of the gain on selling the house that we're downsizing from.
Yep. Cash and reserve questions and tax implications. That's all questions that I refer to financial planners or to CPAs.
Well, we're happy to field all of those.
Yeah.
Those are our bread and butter, really.
Mm-hmm.
And they're easy for us, right? And just like mortgages are easy for you.
They are, and they're great clients for you as well. Those kind of people who, rather than trying to fix mistakes after the fact, the people that are thinking, okay, well, let's try to figure out how we're going to do this, and how does the mortgage integrate into our financial plan or our financial planning? Or if we're just starting the financial planning process, then what can we do from the very beginning? So those are great clients for me to have, but they're also really good referrals for you because it's the exact type of person that you want to be talking to.
It is. Those are the ones that we, the value of the money spent early on in your life.
Yep.
Pays off, hundreds of times because you've made good choices and created a good solid foundation. But good.
Yep. Yeah.
So what advice would you give to a first-time home buyer these days in Denver who's struggling? What do they need to know? What do you wish they knew?
Yeah, so I try to do quite a bit of education with my first-time home buyers. A couple things for them to know. One is you've got to get your financing lined up. So we not only do pre-approvals now, but we're doing what's called underwriting pre-approvals. And that's just a second step in the pre-approval process. So pre-approval is loan application, credit check. We run them through the automated underwriting system. That's a pre-approval. Now I'm recommending to all my buyers, we need to collect all the documentation that we're going to need for your final approval on the front end. We're actually going to get that into a lender, have it reviewed by an underwriter, and make sure that all of it's cleared and ready to go.
So it looks like they're cash. They look like a cash buyer at that point?
Not quite as good as a cash buyer, but they're definitely going to be way more attractive to sellers if we can let them know they've not only been through the pre-approval process, but they've already been through underwriting. We have their loan approval as far forward as we can go, and we know that they're not going to have any problems with their final loan approval or with their financing. Typically, sellers, there are three things that sellers like. They want to get the highest price for their property that they're selling. They like people who pay cash or have larger down payments, and they like to hear that people have their financing ready to go. So those are the things those are the warm and fuzzies for sellers. I can't help with the first two, but I can certainly help with the third one. And we go beyond that because in most cases I'm talking to the listing agent and I'm letting them know exactly who the borrowers are, where they are with their approval process, how much their down payment's going to be, what their credit scores are. I'm giving them a very clear overall picture of who this borrower is and assuring them that we're not going to have any issues with the loan approval. The sellers want to get the most they can for their property and they don't want to have any problems with closing, right?
Well, right.
So,
I want my life easy if I'm selling my house.
Yeah. So we just want to make sure that the seller knows what kind of borrower they have or buyer. So that's the first thing that I recommend for first-time homebuyers. The other part of it is the education piece of what's going on in the marketplace. So they usually get this from me, and they're going to get it from their list or from their agent as well, their real estate agent. But I try to give them an idea of what's going on in the market.
Mm-hmm.
If they don't know that already, I try to paint that picture. I'm not trying to overwhelm them or give them a pessimistic view of what's going on in the market, but I tell them realistically, this is what you're going to be up against. And I'm going to help you with that financial piece to make sure that's ready to go. But mentally, you guys need to flip that switch to where you're committed and ready and aggressive and make decisions quickly. And if you're going to do this, you got to go for it, because there's every house you see, there's going to be 8 other people that are already at that point, right?
Yeah.
So you've got to find a way to differentiate yourself from those other people if you're going to have any shot at getting these properties.
So what's the status on people writing letters? We're a wonderful family. We'd like to buy your house. I know that there's been some controversy around that.
There has been, and I don't know that I can really give a good answer on that. I know that there are a number of real estate agents out there who feel that that is walking over the line of legality.
That was my sense of what I was hearing about the.
Correct.
So.
Does it still go on? Yes. Could it work in certain circumstances? Absolutely. Real estate agents may not be comfortable with that, but if the buyer and seller are communicating and they're telling each other about each other, I don't know that that's anything that anyone can do anything about, really. I think when it goes through the real estate agent, I think that's where the real estate agents get a little bit uncomfortable with that, and I can understand that. So I think that would be a good question for a real estate agent. I honestly don't know what the legal ramifications of that.
Fair enough. I just didn't know if there was a lot. So with the red hot market we have, are there a lot of houses that are going for higher than asking and perhaps above appraisal? Are you seeing much of that?
There are, and there's something called an appraisal gap that's really important. So again, if it's a house that's in good condition, it's in a good neighborhood, and it's priced right, chances are they're going to get multiple offers that are going to be above the list price. I've seen them as high as $50,000 over list price, and pretty consistently 25 to 30,000 over, depending on the price point that we're talking about.
In the olden days, we would have said the real estate agent was a bad agent. That isn't the case anymore. Yeah.
Yeah, but it's really difficult for an agent to list a property right now because they look at the neighborhood and they see what other houses are selling for. They don't know exactly where this is going to go.
Yeah.
And they have to pick a number to start with. So it's not their fault if
no, not at all.
It's just demand that's there in the marketplace. So an appraisal gap is really important. And the way that works basically is that if you have financing, so if you're not a cash buyer and you're doing a loan to help purchase the property, when I make that loan, the loan is going to be determined by the purchase price or the appraised value, whichever is lower. So when the purchase price and the appraised value are the same, it's very easy for us to calculate that loan. But if the purchase price is $450 and the appraised value is $400, that is what's called an appraisal gap. And for most of the purchase contracts that are being submitted out there right now, they already have an appraisal gap. So if they know what the purchase price is and they're offering above that price or that list price, in the purchase offer, they're already letting the seller know we're going to pay for that. That gap will be covered by cash from us out of pocket at closing.
So for those newbie buyers, that down payment issue is really different now than it might be in other environments.
It just makes it much more difficult for first-time home buyers to purchase if they don't have a lot of reserves in cash. But there's a lot of things we can still do to help them. And also they're usually making offers on properties that aren't as expensive. So that appraisal gap is usually not as dramatic. So it might only be $5,000 or something. And there's ways that we can help them with that. But if you're in the $400,000 to $700,000 price point, chances are you're going to be making an offer above the list price, and chances are the appraised value may come in lower, and therefore you need to address that appraisal gap if you're going to have any shot at getting in the mix for that property.
Wow.
So I think if you spoke to any real estate agent now that's out helping buyers make offers, they would pretty much tell you we're not making any offers unless they have an appraisal gap clause in that contract.
I'll be darned. Well, that's new to me. That
Yeah.
it's just an everyday thing now. Not surprising. Just didn't know how they were handling it.
There's also, not that this helps for some home buyers, but there are offers being made without needing an appraisal. There are offers being made where they say we're not going to do an inspection. We'll buy the property as is. So there are other ways that they're sweetening the deal. I don't recommend that, but there are offers being made out there.
Oh, there was some. Oh, yeah, and people get into houses and discover that they're infested with stuff, or they, just don't do it without appraisal or inspections. Appraisal, like that's your choice, but an inspection, yeesh, no way.
Not something I recommend, but it's going on out there.
Of course.
Yeah.
Well, buying a house is such an emotional thing. You and I approach it in a non-emotional way because that's what we're here to do.
Yeah.
But when I'm buying the house, I'm not me. I'm the emotional home buyer, and I'm sure you were too at that point. It's like, ooh, that's a pretty kitchen.
We always tell our clients try to take the emotion out of it, but that's absolutely impossible to do.
I was gonna say,
being having bought several homes myself, it is absolutely impossible to take the emotion out of it. So,
so what's the biggest mistake you've made buying a house? Sorry, I didn't prepare you for that question.
I don't know that I've made a big mistake. I think mortgage-wise, the thing that the lesson that my wife and I have learned is that we've done a second mortgage home equity line of credit several times for different reasons that made sense at the time, and we, in every instance, ended up refinancing and paying off the second mortgage. So I do second mortgages. I recommend them to my clients. They can be a fantastic tool. Yeah. Personally, I don't know that I'll ever have one again, but that is one of the lessons that I've learned. They're just really difficult to pay off. If you've got this line of credit and you're making a very low interest only payment, it's very difficult to pay those off. And so you just need to understand that product really well before you get into having a home equity line of credit. So that's what I would say.
Do you have any folks open up HELOCs just as sort of an emergency reserve ever?
We do, and I've used them that way as well. It's very tempting. It's very difficult not to use that home equity line of credit. So if you've got $50,000 out there that you can access anytime, it's difficult to have it without a zero balance.
Unless you're a CPA financial advisor, in which case you had one with a local institution for $100,000, and they finally closed it because you never drew on it after 4 or 5 years. It was funny.
The same exact thing that happened to me. I think those folks, I really try to explain to them how the product works. It's a tool that you can use. It's another tool in your bag of financial products. And if you have a financial planner, a CPA, somebody else that's helping advise you, if something comes up that's not quite an emergency, does it make sense to use that home equity line of credit? Is there another way? Do you draw reserves or funds from other asset accounts? I mean, it's something that you really want to be careful with using, I think.
Well, we're getting ready to do potentially a fairly significant remodel here. Do you deal in financing for those kinds of projects?
We do. So we in some cases, we will look at doing a first mortgage refinance if it makes sense. Home equity lines of credit are very easy to use for those. There's other ways to finance those jobs.
We'll talk more offline. I don't think everyone cares about it, but actually it ties into what you were talking about. We're trying to create this house and make sure it's more age and place friendly. So getting laundry up on the main level, getting garage up on the main level, and making some adjustments to that. So
for sure.
That's my version of downsizing. Then I'll rent out the basement. Yeah,
it makes total sense. A lot of people are doing that, and it's a pretty easy analysis for me to do. So once I have the information, once I know what you want to do, once I know what your financial goals are, how long you're going to stay in the house is really important.
Till they carry me out feet first.
Then it's easier for me to give you ideas on, does it make sense? Is the home equity a better option? Is the refinance a better option? Is there another way to finance the remodeling that makes this better sense? So it's pretty easy to analyze that and get good, accurate information quickly so you can make a good informed decision on what you want to do. And I help people with that a lot, actually.
Good to know. Good
Yeah.
to know. Excellent. So
Yeah.
we're kind of coming to the end of things. I always like to give my guests a shot. I've asked you a zillion questions. Give you a chance to throw one back my way. Is there any question you'd like to try and trip me up with?
There is. It's probably a question that you get quite often, but I'm curious to know how COVID has affected your clientele and your the services that you provide, the counseling that you do.
Yeah. So COVID has touched all of us in every aspect of our lives, right? There's no doubting that. We've gotten very adept at working online. And the introvert in me is kind of enjoying that just a little bit. Don't tell anybody, but Zoom meetings are the deal now. Looking forward to meeting folks in person as we go forward. So that's part of how the service is going to be different. It's all been online. The investing environment over the last year has been a whipsaw ride. We started the year not bad in 2020, took a complete nosedive in March that frightened many, many people, and then came shooting out of that with incredible gains and starting to see a shift toward value as opposed to growth, which if you want to know more about that, let me know. So it's just kind of, that whipsaw is all I can think of, the whiplash of going back and forth. But what that level of uncertainty does is makes us all feel tension. We all get a little more attuned. It's kind of a PTSD, not on that scale. Don't take it that way literally, but just that sense of what's going to happen next. I feel very anxious. Now, in my business in particular, it's caused people to look more carefully at what's happening in their lives and said, you know what? Do it yourself is no longer the right answer. And so we've actually had a lot more inquiries in this environment than we have in previous years. And we're thrilled to help folks out. I don't want people to be scared, to live in that place of not knowing or uncertainty or PTSD, if you will. So that's what's happened for me. And yeah, lots of folks have lots of questions. Suddenly life insurance, medical powers of attorney, those are questions that people wouldn't even hit me with before. And now they come up and they're relevant. And I respect that. It's stuff that we've always tried to help people encourage them to consider and attend to. But until it kind of feels real, it's easy to ignore. But
yeah,
lots of things feel more real now than they used to.
Do you see your clients wanting to save more? And are you recommending that?
Well,
more savings?
2020, everybody saved more that I know because they couldn't go do anything.
Yeah.
For the folks who weren't out of work. Now, the folks that were out of work, different story. But they're changing their goals. I think there's been a huge revisit of what are my values, what's important to me, and maybe retiring a little sooner because life is short, or maybe changing industries because I want to do something that feeds my soul more. And so we've always focused on really the heart of financial planning, if you will, what your goals and values, our tagline, life goals, money goals, in that order.
Yeah.
The whole year has been a shift toward really focusing in on what are those life goals, what are the family values, which I think results in much more robust plans. People understand what they're doing better. They just feel like they're oriented toward their own personal North Star in a way they haven't been before. So COVID has a lot of bad things, but it's allowed us to be introspective and take some good from it.
Yeah.
So
good.
I think you've seen some of the same things,
We have. I mean, I think it's exactly what you said. There's just more focus. People are definitely more focused on finances and saving money, and I guess changing their outlook on their lives. I guess is another way to look at it.
Yeah, no,
It's forced us all to kind of look at things a little bit more different, and there's definitely some good in that.
Do I need a new pair of shoes? I don't.
Yeah.
Right.
So
new pair of glasses, yeah, maybe so. But no, it's just it has been eye-opening and enriching for everybody. I hope. I will, certainly for me. It's like it's nice to sit back. In this past year, I've brought my daughter on to the company, which has expanded our possibilities quite a bit, and that's exciting too. So COVID has brought all sorts of changes,
Yeah.
And I'm looking forward to what life will look like over the next 24 months, as I don't know if we come out per se, but as we transition into whatever our new normal will be.
Yeah. Closer to what it was before, hopefully.
I really would like to do some proper traveling.
Yeah.
But
Eating in a restaurant would be nice.
Eating in a restaurant would be so good. Yes. Yeah. All we have is a camping trip out west of Moab planned at this point because we didn't know.
Yeah.
It's very socially distant. Do you have any travel planned?
We have some of the similar stuff going on,
Yeah.
but I'm really hoping to do some of the travel that we did before. Before COVID, I'm hoping to start doing some of that maybe at the end of this year or next year. That's really what we're looking forward to.
I need a Disney trip, just
we need to go somewhere.
fantasy. Yeah, very good. Well, thank you for joining me today. It's been an absolute delight chatting with you. If folks have questions about mortgages, mortgage loans, and some of the strategies we discussed today, I will be adding links to Ed's site in the comments on our locations. You can see replays of this on YouTube, Facebook, my personal page, and Facebook, my business page, and I'm sure Ed will repost it in a couple of places as well. So till next Friday, thank you for joining us. Have a great weekend and have fun with your finances. Bye-bye.